Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, July 2nd. Just getting the print, guys, for U.S. non-farm payrolls coming out at 4.8 million, topping expectations for print of 3.2 million. That puts unemployment at 11%. That's below the 12.5% expectation. Labor force participation pops up to 61.5 from 61.2. So pretty decent numbers across the board. Average weekly hours 34.5, right in line with expectations. Private payrolls at 4.7 million. Expectation was 3. Upward revisions to last year month's release from 2.5 million to 2.699. So really strong numbers on really strong labor numbers rather on the NFPs this morning. Great to be with you guys today. Aurelian, Jay, Pete, Zia, I just wanted to get that out early in the session. On the menu for today, here's what the DXY is doing right now on a 10-minute chart. Okay, we'll see how this pans out. For today, DXY, Euro, Sterling, Aussie, gold, the exhaustion trade or not, we'll discuss that at length. SPX also at resistance, dollar CAD at resistance, Kiwi dollar with a breakout overnight, dollar Swiss with the breakdown, dollar peso at support, and dollar yen making that a break and test of resistance with a nice reversal here yesterday, an outside day reversal. Lots to discuss ahead of the extended holiday break. I hope everyone has an awesome weekend. Just quick reminder, U.S. markets are closed tomorrow, so there won't be an update tonight, guys. We'll be right back online Monday as usual. But keep in mind those thin liquidity conditions as we head into trade today in the U.S. And let's delve into the price action, shall we? Here's what we look like on DXY. Quick reminder, here's what the DXY looks like on the weekly charts. Hey, man, Jay, great. Good morning to both of you. Great to see you in the room. So the major focus range remains intact heading into the first, I guess not the first weekly close, but the first close here into July trade, and that's 97.83 on the upside to 618 at a yearly range, and the objective yearly open at 96.50. We're still in that range. Momentum still completely neutral here with a short, slight downside bias, right? Something, watch the close of the week. Here's the daily chart, okay? So we came off, again, the yearly open support last week, that 786 retracement of the yearly range. Really nice rebound here. This is the choke point. We were talking about these two regions as both being regions of interest for exhaustion. This is 97.71 into 97.87, okay, 618, again, same levels. This is that late March low and the objective June open. Now, the monthly open becomes less prominent as a level as we head into July here, but definitely a level that we were watching. So here's the turn, got a couple of needle points right in there. Nice turn yesterday, breaking the weekly opening range lows. Here's the resumptive mood, basic trend support. Watch today's close. I don't want to stress this slope. It's only a 2-point touch, but watch today's close. Okay. Again, thin liquidity, guys, heading into a holiday break. I don't trust price action in this environment. Just a disclaimer. I'm probably gonna be flat into the close of the week here. Just not the best environment for us as near-term traders. But that being said, here's what the intraday chart looks like. Another reason for hesitation, basic 618, that rally off that low that we made on the 23rd puts you at 96.88. Basic slope support was right there. Okay, here's what the DXY looked like last night. Okay, so there was that break, the 50% retracement. There was that last level. I told you to look for a reaction there, 96.88. We're getting it now. Okay, we need to settle below this to keep the downside bias in play, and you're looking for a drop into the yearly open. That's 618, beautiful range, 96.44, 96.50. This is the interruption, and this is going to be paramount today as we head into the close. Gotta close below this to keep that downside going. If we recover, if we open up the US trade session, we're back above 97, yeah, you could probably get a larger recovery. Weekly open resistance is all the way up at 97.46 at this point. So little cautious here on the downside, curbing the appetite for the immediate short bias. I do like an inevitable break of this lower. That said, you got to look for a pivot here at 96.88. Add to that, just to add some color to this chart, if we bring up a 38.2 of the broader rally, we're there, right? We're there. This is a 38.2 of the rally off the low. Break. Is this resistance? If this holds and we continue and hold below 96.88, right on. But if we get back above, like I said, 97, you're probably looking at a larger recovery. So testing near-term uptrend support, testing a break of the lows. If this was a break of the objective weekly opening range low, we should be looking for a late week low. Guess what? This is the last day of the week. Use caution. All right, so that's DXY. Where does that put us on the euro? Well, here's what it looks like now. Here's what euro looked like earlier in the week. So early, we had broken, as soon as we opened up the week, we spiked higher. We turned just ahead of that confluence resistance zone, right? So we noted the threat of a move lower, bullish invalidation. We are lucky at luck or skill, doesn't matter. Sometimes it's better to be skillful than lucky. But we were looking for bullish invalidation at that 1187, 1191 zone. We tested it once early in the week. We rebounded. We tested it again. That held. And then we popped higher. Here's the test of the weekly opening range highs, downslope resistance. So it's in the same exact posture as DXY heading to the US trade session, right? If this weekly opening range if these weekly opening range breaks are legit, we should be looking for follow through heading to the US session. If you get a quick failure or you get a quick pullback or this thing buckles back pretty quick into the US trade session, it's just all hands off. Okay, you don't want to mess with it. You probably get some more range. You probably get some more jackknife action. But that's really the focus on both Euro and DXY heading to the US Open. No change to any of the levels. Still need to break below key support here at 1186 to get this thing going. A 1325 breach is what's needed to mark resumption of the uptrend. And we are still in the uptrend. Here's Euro on the daily chart. You look at a slope like this, and I always tell you guys, I really don't like these really sharp, acute slopes. They typically don't, they don't work too well. They don't last too long, but look at it on a closed basis. You can't make this stuff up. Okay, now not only do you look at that slope support as daily support on a closed basis, but now you also have the objective monthly open right here at 112.33. That's going to be at slope support. So you know the levels to look for, that'll invalidate this current uptrend. All things held constant, you're just coming off of upslope support here. So what are the first levels on the upside to look for? I have 113 as that, well, it's really the open here, but here's the level we're looking at, 1325, okay? That's still gonna be the level I need to see break. It's a 618 of the drop from the high. Really objective stuff. Weekly charts, going out of order here a little bit, but not too far off from the DXY. Here's Euro on the weekly. Same critical range in view. 1166 on the downside, 1167 is support. Initial resistance 1370 is weekly resistance. Breakout zone at 1445, that's last year's open. Questions on Euro? We like the upside, but if this is going to hold, we need to see this basically start to accelerate from here heading to the US trade session. 1325, 1369 on the upside. Next targets. Initial support, still have the December high here. I have bullish invalidation, at least for myself, at 1215. Okay, if we get back below the weekly open, at this point, you're invalidating upslope support. You're invalidating the objective weekly open. I don't even want to wait till 1187, but that's the contingency plan. That's the break that'll sort of unleash the downside if we get it. But you get the picture. So that's DXY and Euro in a nutshell, right? Heading into the extended holiday break. Basically both testing a break. I mean, DXY is broken a little bit higher the weekly opening range, where Euro is still just testing here. But we do need to see either acceleration, or if this chokes here, that's the move. That's the move. All right, 3, sterling. Pretty stellar moves in sterling. Here's what it looked like last night. Okay, here's the British pound. Really sweet, clean opening range break on a weekly basis to the upside, gave you the upside bias. It had broken downslope resistance on that same move, extending off the highs there. So that break cleared the weekly opening range, cleared downslope resistance, kept the focus higher. You had the median line here just higher at the 50% retracement at 125.31. And that's basically what you're looking at as resistance. Key resistance a little bit higher at 25.93. Remember, this was the critical support zone that we were looking at into that decline last week. This is what we highlighted into the start of this week as we closed last week right there. Classic sterling move. You start off the week, you dip below, fake out everyone, then recover right quickly above, test that level of support, and here's the breakout. It's a beautiful play. Here's what sterling looks like. I guess first let's start off on just really quick on the weekly charts where we are. The defense of 2280 was massive. On a weekly threshold, that was a 38.2 the entire rally off the yearly lows. This is just basic slope. Take that resistance slope parallel right there. Boom, boom. Here's the move. I highlighted this on Daily FX yesterday as well as far as the weekly reference was concerned. The momentum trigger break that we got on that move last week when we broke higher, or excuse me, into early June when we broke higher, that momentum signal has offered support on that trigger. And here's the recovery. Okay. From a weekly standpoint, I just want to highlight 26. It's the 618 of the drop. That's the first objective lateral level you look for on the weekly charts. Shuffle back to the left on my cursor here. Look to that dip we made in 2017. Look to the close low of 2018. Look to the pivots that we made in 2019. Okay, they all are around this 26 region. So that's what I'm looking for on the upside here for sterling on the weekly charts. Okay, on the daily, looks like this. Now, this is what we were working with. Okay, as far as the previous update, if you go to the previous update, here's what the daily chart looked like. This was the support break that essentially was giving us that risk. Oh man, we got to look for 23, 27 again, because if that breaks, we're in big trouble. Well, classic sterling, right? False break, nice reversal back higher. The question is, do you stick with this slope? I'm inclined to say no. I think we could do better. You could work with something like this off the most recent low, high, low. Okay, give that a little bit of a crank. Go to modified. And what this does is it highlights and puts another spotlight once again at the 126 handle. All right, so for me, that's kind of a big zone. If we get there, you have some highs to contend with right here. That outside reversal day that we made back on June 24th, that high comes in just a little bit higher from where we are now. I'll show you the intraday chart in a moment. But that's sort of the major breakout threshold you need to keep the upside bias going. Okay, we're on the back of a 3-day stretch. So again, thin liquidity conditions where we are in time. I wouldn't be too surprised to see an exhaustion, press here. But at the end of the day, it looks pretty clean, guys. Here's what it looks like on the intraday charts. And here's comparison side by side of what it looked like last night. Okay, so there was the breakout, kept our focus higher. Interestingly enough, I actually laughed when I saw this morning. This pullback, okay, I wrote this, I published this sometime at 4 o'clock, 5 o'clock. This pullback found support right there at that slope and just kept on chugging. The high we just registered on this 2-hour candle was 125.30. The 50%'s at 125.31. All right, you're in overbought condition on intraday charts, on intraday momentum. So again, you could get some kickback here. Yeah, look for initial support along that parallel, but you're looking for basic constructive price action while above 24.33, this level right here. Next major upside level, 26. Okay, that slope that we just added on the daily chart, gives you the median line there. The current slope we're operating off of on the intraday chart gives you the 75% parallel there. You have last month's, well, I guess it's last month at this point, the May open right there as well, and the 618, 126. That's the level to watch. Any questions on sterling? Long story short, the immediate threat, while below 25.30, sure, for some softness. You're looking for exhaustion on that pullback, a breach above here, and we're hollering for 126. The only thing that'll put me bearish is going to be a 23.20 break, 23.27 right here. This is the key zone that we were trading off of. Remember, we shifted our focus lower here. This was where we wanted to get bullish again. The rally worked, failed at that slope. We moved lower again. This actually turned us bearish, but the quick recovery, got to stay nimble, react to price. Looks pretty good. That's sterling, number 3. Number 4 from last night is Aussie dollar. Here is what Aussie looks like. So it's getting a little hairy, but I still think the risk is for a little bit of a setback from here. So let me take a step back and show you objectively for the Aussie where we're coming off of. Recall that it was a big resistance zone, okay? And that resistance zone was defined by the 2020 objective yearly open, last year's 2019 objective yearly open, and this year's opening range high. It was all lined up right here. We ran into it into the start of June. We pushed an outside reversal, not an outside, excuse me, reversal week right off that zone after probing just above. And again, we've been sitting in this zone. So it's kind of like Euro, kind of like DXY. The major key critical weekly zone is still in play 4 weeks later, right? Well, that can be frustrating, but there's still a opportunity within the interior of this. The other thing I want to note, momentum never really pushed 60, right? We're still here. So we haven't gotten that breakout in momentum. We haven't gotten the breakout in the yearly opening range highs. And you think to yourself, well, is this the extent of it? You could probably still get another pump lower towards 67.30, 66.60s. That's a bullish inval. Ultimately, we are looking for the break, 71.20, and the upside into 73. But is the extent of the correction over? So I don't know. The primary thing I want you to focus on as far as this chart's concerned is this critical weekly range, 67.30s into 70.16, 70.42. That's what matters on the weekly charts. Here's the daily. You were trading within the confines of this upslope, a nice channel, very clean. You had this nice consolidating range that you were trading within. Looks like we broke the consolidation range to the upside, but you're not getting much follow through. And the intraday chart has you at near-term resistance, and I'll show you that in a moment too. But some basic levels to keep focus on. Your objective high day close for the year, okay, that registered right here on the 10th. That high day close registered at 69.61. I'm sorry. That's the reversal close day. The high day close comes in just higher, 69.97. That lines up just ahead of that key zone of the 2020 open, 2019 open. Long story short, you get the picture on the daily chart. Support, well, you'd need a break below the February high at 67.74 to suggest a larger setback. That's your 100. So even 2 equal legs off the high would take you down to 67.90. Okay. We need some clarity on this consolidation break. Here's what it looks like on the intraday. Like this is resistance. If it's going to hold, basically like this is where it needs to hold. So here's what the chart looks like now. Here's what it looked like last night. It's the same slope that we've been working with. Again, I always provide the previous update on that, guys. So you can just click on that. It'll take you to that report and where in that report. So here's what it looked like into the open of the week. Okay, we came into support, those swing lows, 68.33, that held. Here's a breach above that 68.90 region, 68.98. We're testing the upper parallel now. Again, here was last night, and here we are testing it yet again. So look, if this is going to work, if it's going to hold this formation, you'd look for exhaustion basically here. Now, there's not any signals. I was stoking this out right before the webinar. There's not any major signals screaming to try to take it yet. It's great positioning, but if you put a stop against that high, it might just trigger right into the US Open, then move lower. I don't know. So I'm kind of skeptical on this. It's too clean at resistance with too clean of a hold. I feel like it's got to shuffle out someone before it makes the move. So that's just my opinion, guys. And again, because of the environment we're in, it makes me very uneasy. So that's my idea here with Aussie. I think you look for some possible exhaustion right into this zone. If it's going to happen, it's going to happen here. If it's not going to happen here and it breaks, you should get the accelerated rally. That would entail some dollar losses, but you should get the accelerated rally right towards 69.76 and this year's open, right back into the 70 handle. But for me, it's about the pivot right here. Okay, and again, you've been marking some divergence. There's reasons for us to think that this is exhaustion. You just want to wait for a little bit more of a clear signal, wait until the US Open. Anything you take needs to be against the high. 69 would be the first level on the downside, just a soft support. Here's the consolidation that I've been working with right here in purple. Kind of kicks out just above the weekly open. So Aussie, yeah, we got to respect the range contraction. You know what I mean? You could play the interior, in which case right now would be the area for the short. Excuse me. But at the end of the day, we need the break of this consolidation pattern for guidance. Questions on Aussie? Keep in mind that I got the RBA interest rate decision on tap next week on the 7th, which I believe is Tuesday here in the US, Monday night. Okay. Gold. Is it the exhaustion? I feel like a broken record. Every time this thing pumps into resistance, it does react, but the pullbacks are short-lived, right? This one was a little bit deeper. We wanted that region. Here was a key region. Once we pivoted above that, we tested a support, kept the focus higher, raised ceiling, turned right ahead of resistance. That held support. Again, we noted the divergence that we were marking into the highs here. The weekly chart. I'm going to take a step back on this, guys. It's really phenomenal. This could be the biggest fake out. Not fake. I don't want to say fake out. It could be the biggest washout here. Just as everyone's jumping, oh, gold, the coronavirus outbreaks are getting worse. You might get a Biden administration, which is not business friendly, and everyone's the bids for gold just seem endless, right? All of a sudden. Meanwhile, gold is working on its third day down or second day down. Here's what gold looks like on the weekly chart. Objective stuff here. I'm not going to say anything. I'm just going to show you this. All right. So the first region of resistance, 1733, we started talking about that. We got a couple of beautiful shorts off that, a deeper one in May, which offered a really nice correction. Here's the second pump higher. You broke that upslope for the pitchfork, but basic slope off the lows here in red. Here's resistance. Here's resistance. This is last week's high, the line you're looking at 1765. Look at this thing. Ongoing divergence, once, twice, thrice, fourth divergence point. You all know where I stand on this. The funny part is, and this is just a side note, Daily FX write their forecasts every quarter on gold, and we just published ours a couple of weeks ago. We just submitted them a couple of weeks ago. They got to go through compliance, blah, blah. I think they're publishing them this weekend. But long story short, this is the chart that I had on there. And I was saying if 1665 breaks on a weekly close basis, you have to allot the breakout, okay? You're looking for 1795, you're looking for 1856, the high week close. Well, we closed above it last week. We pumped higher. The high that we registered now is 1788, just ahead of that. But we haven't really started to close a weekly close above that slope. Again, I can't, I just keep bringing it back to the weekly close. So look, I don't want to curb anyone out of a long position. If you're holding a decent long position, you're a longer term trader, you're thinking more macro, okay. You might expect an interruption here, my humble opinion, for a pullback. For the short-term guys, near-term guys, that's kind of the focus right now. You gotta look for it to see if we get further, any other exhaustion pump higher, break lower below uptrend support would be the start. Ultimately, we want to buy. Ultimately, it is an uptrend, but you're testing uptrend resistance. Said it once back here in April, said it again here in May, said it in June. Okay, that broke, but here we are again. Here we are again. Here's what gold looks like on the daily chart. So the first brought attention yesterday, kind of flashed me at this, was the outside day reversal. Typically an outside day reversal off resistance or off of highs is an exhaustion alert. It's a red flag, right? So, well, that was the first pump. Basic slope off the highs from last 2 months, basically touched that resistance slope and turned lower. I'll show you the intraday chart in a moment, which had us at upslope resistance. You look for the risk for exhaustion. I mean, there's not really much to say. 1747 is the high close that we made back here on the May advance. That converges on slope somewhere right here around 1747. But you curb your appetite for the long side, right? That's pretty much the end of it. Here's what the intraday chart looks like. So it's important to note we haven't broken up slope support yet. So right now that exhaustion trade that we were talking about yesterday is specifically and explicitly only trading within the confines of the advance, right? So within the interior of the advance, yeah, I think we're still looking lower. Do you think you look for a move? If not slope support, this critical threshold here, which we defended on Friday. Slope support right now comes in just above 1755, just below 1755 right here. The high close, the 100% extension of the advance back to 1745, 1747. That's the key break. That's what would shift the focus lower and give us a conviction correction in gold. 1731 would be the first target. But first things first, one other thing I wanted to highlight is despite the excitement that we got with the outside day reversal, and I highlighted this piece yesterday, kind of wanted to really bring your attention to it, is the fact that the weekly opening range remains essentially intact. Here's your weekly open. You set a low, you kind of test the low, you make a high, you false break the high. If this is a false break of the low, then you're essentially still looking at this region here, which puts the onus on a close below this to keep this going. So just some really like near-term micro intraday price action stuff. But respect the weekly opening range here, which is still basically intact. That's yesterday's candle, yesterday's outside reversal candle. Any questions on gold? And certainly, again, I don't want to get anyone too excited. You can't refute the long bias in gold. You can't refute the fundamental argument behind gold with, all the macro stuff that's going on and all the geopolitical stuff that's going on. But man, resistance is resistance, and uptrend resistance doesn't necessarily mean you're bearish. It just means that the uptrend at this point, you could see some exhaustion, you could see a setback, expect it. Questions, comments, concerns on gold? Okay, that's number 5. Number 6, here's SPX. So we're basically testing a breach of 2 things here. Uptrend resistance and this multi-week consolidation off the lows from June. Right? Here's what the SPX looked like last night. And I just wanted to highlight that this zone was really what I wanted to see a pivot at. I wanted to see a reaction somewhere around that 3140, this zone right here, the zone that's highlighted right here. We got the initial pump into it actually, and it held, it pulled back. Here's, post non-farm payrolls. Here's the breakout, the next major critical zone, 3169, 3181. That's what you're looking for. You got upslope resistance up there for the pitchfork. You got the January low. You got the 786 retracement of the decline. Former swing highs. I mean, it's loaded. It's loaded. So that's my immediate focus right now on the SPX advance. Look for reaction up there. Support along the median line, gotta still respect it. You know, I noted it yesterday. I didn't really think you were gonna actually get a perfect test of the median line like you did, but you did. First support right there, so I'd be looking like 31.20s. And yeah, bullish inval. I'll bring up right to that 618. We've seen a defense of that parallel already. We break back below this pivot, you're essentially looking for a dump back into the June open again. So look there at the levels for SPX. Any questions on SPOOs? It's funny, just checking the wires everywhere. Jobs blowout, 4.8 million added. Futures point to huge gains. Da 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 da. Just the headlines are going to run with this. Okay, dollar CAD. Here's Looney, and here is what Looney looked like earlier in the week. So I feel like it was too clean. Looking at it in hindsight, yeah, I was just trigger shy. Here was the break. Really nice range to open up the week, break to the downside. There was 36. That's the level that we were really looking for. More of a critical pivot at. Man, it broke right through that and made a quick move right into that 38 too. So we got the drop into 35, 62. That held. Yesterday it was kind of blah, right? The recovery failed right here. Slope resistance, right back at that 100, 618 combo, my favorite confluence zone. So, you know, all things held here. Let me take a step back. Here's my issue. Here's dollar CAD on the weekly chart, right? So I wanted to see a close below 35.15 to kind of validate the reversal or the kind of the move lower on the back of this recovery off of that 786 last month. That's kind of where we gapped above. That was the close high that we made in that high day close for May, or high week close rather. Just a nice level. Critical resistance though is still up here. Key pivot in price 38.2 of the yearly range. You got the 2017 high there. Just a nice zone. Origin of the breakdown, right? You saw acceleration in price once that gave out. So like, is this a recovery bounce and you're going to get the final stretch here to validate that sort of correction for the move? Or is this sort of the snuff out? I don't like the weekly chart. And when I don't like the weekly chart, I typically don't get too involved in the position, generally speaking, just because I don't have a clarity on the general consensus of the roadmap. Here's what it looks like on the daily chart. This breakout invalidated down buys for us. It was like, all right, not only did we break down slope resistance, we also cleared that critical threshold. 100, 618 confluence, my favorite regions, 36. All right, well, you got a sustained 3-day advance. Now you're back below that, checking it as resistance. It's frustrating for me. It's frustrating for me. You know, all things held constant, I'd be inclined to take a short right against 36 here and look lower again. But it's dollar CAD. Again, the time that we're in and the environment that we're in, end of the month or start of the month, holiday, thin, extended break. I just don't know how to play this, guys. Here's the intraday. Now that slope looks pretty good still, so I don't want to necessarily discount this, but again, there's no Momo. There's just no momentum at all. I get ideal scenario, this held and support, you bounce, this holds the resistance confluence, move right on lower into 36.40, 34.86, 34.68. I just don't see the price action following through here. So look, if you pop higher, you could get back into slope resistance. I had yesterday the bearish invalidation level at the weekly open. You know, unfortunately, that takes you out of slope at this point, but that's kind of still where you want to look, maybe 36.60s max. But the point is, you'd be looking for topside exhaustion while within this formation for the next move lower toward 35. But this is dollar CAD. This thing's been, it gets the move. It definitely gets the move, but then it goes into this nice extended move, sometimes takes it right back, then it goes into this nice move, then it goes into this. So like, the conviction just isn't there, but hopefully we get a kick in momentum here at some point. That's dollar CAD for you. Any questions on Looney? That is number 7. 8, Kiwi. Here is what New Zealand dollar looked like earlier in the week. So early on, this had seemed like a very objective weekly opening range break. Pretty clean, nothing to argue. Here's your weekly open. You set a high, you set a low. You try to break the low, in fact, and Friday's low. Last week's lows is preserved, and then you break the weekly opening range high. So 65, 457 was the first level. Top side breach beyond that, you're looking for this confluence zone. You're looking for the 618 essentially at 65. That was the ideal sort of scenario there for a move on Kiwi. Really clean, panned out and played out really well, right? Here's, well, let me just move the charts. Here's Kiwi on the intraday. So there was a very basic consolidation range break. You had solid lows into 63.80. I mean, this thing was tested like 3 times. The outside day there kind of shifted the focus higher. Here's your monthly open, 65. Okay, we pushed through that, but what I want to highlight is those swing highs from earlier in the month. You're testing that right now. Here's the intraday chart. And here's the side by side. So you took out the median line, you took out the 618, you turned just pips from that 786. Now again, that former swing high from back here last week is right there as well. Again, like 65.40, 65.35, watch that zone. So on this immediate breakout, and I'm calling it a breakout, but on this, we want to see support ahead of 64.57 max. That's here. This is your new kind of key near-term support. Bullish inval still has to be down here. Weekly open 2018 low. Next rip, if we breach, there's a soft target I would put at that former swing high, but you're essentially looking for that rally towards 66 again. All right, so sub 65.40, expect a possible exhaustion pullback. Wouldn't want it to get too deep. Ideally 65 holds, but at the end of the day, as long as 64.57, 64.60s hold, you're still looking for that. Follow through. Questions on Kiwi? Okay, number 9, Swissy. With a bit of a break lower, if I recall. Here's what Swissy looked like early in the week. Oh yeah, so this upslope, and just goes to show you how sometimes you can put these upslopes, guys, in the pitchforks, and it doesn't matter. It'll last like 2 or 3 days, but that's all you need because it still gives you conviction on the reversal trade. So here's what the pitchfork that we were working with. Ideally, you would have seen a stretch into this zone for the reversal, but you didn't get it, all right? And in fact, that median line held, and this break of upslope support kind of unloaded on this thing. So here's dollar Swiss right now. Unloaded, took out the monthly opening range low, or took out the monthly low day close rather, excuse me, from June, turned right ahead of last week's swing low, 94.20s, right? And that's basically the recovery. Here's the first test. If this slope is a legit break, we should see resistance like, whoop, like right here. Okay. One other thing I put on here objectively is a look at just the weekly range, a retracement of the weekly range. And one thing I just want to highlight is that 618 converges again on that swing high that we made yesterday. So look, some levels to look for, okay? If we make it back above the weekly open, the bearish bias this gave us right here is nullified. But you'd still want to look for possible exhaustion into this zone. Make sense? Obviously, break below 94.20, you're still looking for that 100% extension. That's right into the 94.30 level. But man, a lot of these trades, if you look at it objectively, a lot of these trades are basically almost setting dojis here because the weekly range is panned out and you're basically just doing nothing. I feel like I'm looking at deja vu on this trade again with Swissy. Bear with me one second. I just want to see what this looks like. Way too aggressive, but I just want to see. See if that holds. See if that holds. Drop bearish inbounds at 618 actually. Matches on that Friday high. Here's your key zone right now. If Swissy's heading lower, you'd want to see exhaustion ahead of this. Maybe even at the weekly open, but ahead of this. Key support 94.30. Hey, Gary says, love how you can make some sense of dollar Swiss. If it were a blank chart, I'd be lost for any kind of pattern. My pleasure, Gary. It's not my levels, man. It's the markets. I'm just helping you find them. Yeah, Swissy's an anomaly sometimes. It falls into some really nice patterns, and you guys know you can look back in the intraday charts and see we fall into like these fits where we'll cover Swissy for like every other day for like a month, but then we won't talk about it for like 6 months. When the clarity is there, I'm all about it. But on this near term, it's very 95 keeps coming up prominently on a lot of different zones as like the level to watch for resistance if we are heading lower. Here's Swissy, by the way, on the weekly chart. This is the whole problem with the support that we're at. It's a huge region, huge, or as Trump would say, huge, right? Just a massive region. You look at the 2016 lows, 2017 closed lows, major pivot in 2018. This year, yeah, obviously we've soared through it, but you know, the March debacle Corona thing, no one saw. It's unprecedented geopolitical pandemic type things, right? Here we are again. Here we are again. Which is why when you take it back to the intraday, all the more onus on if this holds, the break should really start to accelerate. So at least on the near term, that's what I'm looking at. I don't know why this is stuck on the SPX, guys. Here's Swissy on the daily here. Questions, comments on Swissy? All right, last two here is dollar peso number 10. So it got, ooh, this thing was such a beautiful trade. I hope some of you took this. It was absolutely magnificent. 22.55, 23 was the last level I really was interested in, okay? We're trading below that now. Again, if you're still holding shorts, great. Good on you. Maybe just return or lower your stops to break even or better. I'd have it above 22.81 if pos. And the next downside level is down here. 22.1495 into 13.50 basically. It's the 618 retracement of the entire rally. It's the objective June open and a major pivot in price over the last couple of months. First things first though, downslope support, median line, yeah, is right here. So we got below the target, true, but I wouldn't necessarily be pressing anything further from here, guys. And if you don't have entry above this, I'd still be taking it off the table. Not a trade recommendation, just my humble opinion. But it's been a decent stretch. Again, from the top down, here's dollar peso from the weekly chart. Beautiful reversal. I'm not going to go over this again. Okay, this was the first level that we were looking for. We did technically, again, close above it, but that slope held like a charm. Let me just get rid of that lateral line and show you this. Look at this thing. Look at this thing. Again, you can't make this stuff up. So here's the kickback, okay? And we were looking for the kickback. That kickback coming into some near-term support, so watch out. Here's peso on the daily chart. Again, nice outside day reversal here off the highs, 38.2 retracement to the close of last month. Shifted our focus towards upslope support and towards that 38.2. Both of those have hit. Here's downslope support. Again, could see a little bit of a bounce here. We're looking for a conviction move here. If we pivot below, boom. That critical pivot right back in view. 22.0376 into 22, let's call it 1500. Intraday. Here was the turn. Some nice divergence into those highs. Again, ideally, can't be too static with markets. So guys, too stringent. I told you guys early in the week, even in the Monday webinar, ideally, this was the short zone. Missed it just by a couple pips. Okay, break and clean break of the objective weekly opening range. Here's your low, set a high, test the high, test the low, break the low, test it as resistance, it holds, break of upslope support. Here you go. Here you go. So again, near-term resistance. Again, if we get the pop, we could get back in 22.81 and change. How do you say this in a way that makes sense? If this were any other day, I'd put the weekly open as your bearish inval. Okay, that's like 23. But with where we are in price, time, and slope, I would be just focused on that June high. So bearish inval, like here. Next downside target, right here. Questions on peso? Dollar yen. Here's the abomination to close out the week. And how fitting, despite some of the nasty price action that we've seen, some of the lackluster price action that we've seen, dollar yen of all things is just playing the lines, just playing within the lines, coloring within the lines, like my teaching my 5-year-old, just trying to just stick within the lines, right? Look at this thing. So the level we highlighted early in the week and the level that we had talked about for a while, 108.08 to 108.18. It's a basic 100 off the low. So if it's corrective, there's two equal legs. There's a former swing high set series here is a very big pivot from the series of highs that he made back in late April. Checked it again in May. Break saw a massive acceleration, obviously in June. Breakdown again, the acceleration lower last month. Here was the first test. So here's what dollar yen looked like on the 29th. Okay, you can't make this stuff up. We popped higher, broke the week, moved right into the June open. That broke, the swing high broke. We said keep the upside focus while above that convergence zone. You're looking for a stretch into this zone. You got the stretch into this zone. And now, because of where we are in time, that convergence zone is about the same, a little bit higher, like 107.40s now is basically where that slope is. So again, it seems too freakishly clean to play out. But basically, your ideal scenario here is like resistance there or there, again, for the move into the weekly open and beyond. I guess last week's Friday swing low, something like that. Okay, now we don't have enough conviction of this being a major swing high. It wasn't necessarily like an outside, I'm sorry, that was an outside day reversal yesterday, right? So quick retracement of just this near-term range, and you'll find that the 618, my friends, converges just above that swing low, gives you 108, 106.80, a 7 into 106.80, 7 pip range of support. So that's the game plan with dollar yen. If all things held constant, if we weren't in this abominatory session right now with, the extended break and all that, looking for topside exhaustion, basically ahead of 108 if this is going to work for a move down towards 107, 106.80. Questions, comments, concerns on dollar yen? Number 12. And that, my friend, puts a button in it for the week. For any other questions or trade setups, feel free to throw them on the message board, guys. Again, stay light into the extended break here. We'll pick things up on Monday on the free session with Daily FX, and then right back here on Tuesday and Thursday. But enjoy the weekend. I just want to let this thing breeze by, and I think we're going to get some really interesting price action. Earnings were nuts. I don't know if you guys saw Tesla this morning, absolutely smoked deliveries. That stock's ripping. Pete, thank you and happy 4th. Hey, same to you, Pete. Michael wants to look at CAD Swiss. Interesting. Huh. Pete, what brings your, or Mike, what brings your attention to this? Well, I can see, obviously, last time I looked at this was a couple of years ago. Hmm. Interesting. I'm sorry about the silence here, guys. I haven't looked at this in a very long time. Interesting setup. You're basically sitting on the 50, huh? So from a daily standpoint, it looks like you're in a near-term range consolidation. So here's last month's open. You actually set a whole range, never broke. So it puts the emphasis on this month's, or the emphasis into the start of this month is on a break of the June opening range. Interestingly enough, the June and July opens converge right here. Pay attention. That's a clear cut pivot. You want to pay it. Actually, you know, you look at something like that and you just drill down. That's what your focus should be on right now. Scratch this for now. Just focus on that. Near-term consolidation break. Obviously, the breakout of this range would give you something, but the major play on this would be the breach of last month's opening range, which never gave out. That 4-day stretch is basically the entire month's range. He said, just interested as it's holding trend line from the yearly low. What trend line is that? Off the yearly low? Off yearly lows? Or off the yearly low? Because that trend line, whatever way you've drawn it, is broken unless you do something like this, and that's, you know, that's not a trend line I'd be working with. Something like that. You might think that it's defending it, but I mean, you're just picking lows here. The March 9th low. Okay, so you're looking at something like this. You're basically just doing this as an extraneous factor here on this break. I do that stuff all the time. Sure, I could work with something like that. Either way, Mike, it basically is continuing to highlight this near-term consolidation zone. So even if this breaks, don't get faked out. I'd rather work with the most recent swing lows, which keeps you into that consolidation zone. Does that make sense? Interesting setup, though. He says, yeah, thanks. Hey, you're more than welcome. More than welcome. All right. Well, happy 4th and stay safe, Gary. Same to you. Eman, Jay, Peter, Pete, Mike, Steve, Aurelian, everyone have an awesome extended break, guys. Wish you blessings and your family. Have an awesome time. I will see you on Monday for the free session, then right back here on Tuesday and Thursday. Cheers.